Ladies and gentlemen, welcome to the year-ended 2014 webcast for Cadence Capital Limited. In the year just gone, we've made a record profit, up 102%, with a net profit of $20 million for the year. The Board of Directors announced a 5-cent fully franked dividend, which equates to 6.8% of fully franked yield and a gross yield of nearly 10%. The gross performance for the year was nearly 17%, and quite importantly, as we've been pointing out to shareholders, that has been holding significant levels of cash as well. And our longer term numbers, now nearly 9 years of performance, equate to 19.1% per annum of gross performance. The top performing stocks for the year just gone were Arium, ANZ, the Henderson Group, LNG, Macquarie Group, Melbourne IT and RHG. And the worst performing stocks for the year were Flexi Group, Macmillan Shakespeare in particular, and QBE. It's fair to say that those interest rate sensitive stocks, banks, diversified financials, software and services performed well for us, as well as energy, and commercial and professional services performed poorly. In actual fact, the Macmillan Shakespeare negative performance impacted our performance for the year by about 2 or 3%, which is quite a significant number for the period. Turning now more specifically to the final dividend for the year, which was 5 cents. That dividend is payable, goes ex on the 17th of September and will be paid on the 30th of September of this year. You can see the table that we put into all of our newsletters in this slide and shows our accumulated dividends over time, and also illustrates that as a board and management team, we're trying to steadily grow our dividend income stream over time. The next slide is just reminding everyone that our dividend reinvestment program will once again be operating, and that's at a 3% discount to the prevailing prices at the time, and the DRP record date is the 22nd of September 2014. The second point on this slide is the option exercise. We have had a number of inbound inquiries, and we've actually got a section of our website that shows these facts now, which is that as a CDM option holder, if you exercise your options before the 18th of September, in the case of BPaying, or the 15th of September if you send a check through, you will in fact receive the 5-cent final dividend. And we have actually had $20 million worth of options exercised to date. So we have had a lot of inquiry on this, and people are exercising options for that final dividend. The next slide is a slide that should be familiar to many of our shareholders and newsletter readers, and that is our overall return for shareholders in Cadence Capital Limited, which is made up of a combination of our gross performance, the dividends that we pay, the franking that our shareholders receive on those dividends, as well as the value of our options. We've started putting this slide into our presentations because, as we know, the net tangible asset backing or gross performance of the fund does not show franking. And franking is a very important part of the returns profile for shares in Australia, and we've tried to illustrate that in this chart. Turning now to the summary and outlook for the year ahead, as well as the year just gone, we've just recently returned from a roadshow in Melbourne, Sydney and Brisbane, and it's fair to say that the prevailing sentiment, or what I've called the trendy or fashionable thing since the global financial crisis, has been to be pessimistic. And as I read in the paper about 3 months ago, and I've actually been quoting this quite a lot, the rally that we've had since the global financial crisis, and in particular in the year just gone, has been one of the most unpopular rallies of all time. In our case, we've performed in line with the market over that period, which is about 17%, but we have also been holding high levels of cash during that period, which tends to reflect how pessimistic or conservative everyone has been during this period. The predictions of an imminent stock market collapse, negative returns, etc. have proved incorrect, and the market has once again delivered a 15% return. Since the global financial crisis, it's fair to say that most people, both professionals and amateurs that are investing money, have suffered from what we call excessive pessimism. In our case, probably in hindsight, holding too much cash. And it's the cyclical nature of markets that dictate that we do in fact go through periods of excessive pessimism, followed by excessive optimism, followed by a correction. And this very nature of how cyclical markets are, how cyclical people's emotions are, points to why we are we like to focus on both the fundamentals and technicals when we're entering and exiting positions. So despite all of these predictions and uncertainties in the market, the investment team here will continue to employ fundamental and technical research to determine when stocks are cheap, when they're expensive, and when we should be entering and exiting positions. An important point to convey to our shareholders or potential shareholders is that this process has served us well historically, and especially through extremely volatile markets, and we will continue to employ this approach. Once again, at the risk of sounding too optimistic as opposed to that trendy and fashionable pessimism that's out there at the moment, we do believe that the market will present opportunities in the future, and those opportunities will be similar to the opportunities that have presented historically. We will approach those opportunities as we always have, looking at those stocks fundamentally, and then entering and exiting those positions in a disciplined manner. And finally, keeping up to date with your investment in Cadence Capital Limited, we welcomed the opportunity recently to meet with Cadence shareholders in New South Wales, Victoria and Queensland in August at the Stocks in Value event hosted by Alan Kohler, and a lot of our shareholders were at those presentations, and actually a lot of potential shareholders. We've also been featured in the June and August sections of the ASX Investor Update on the ASX Investor website, and that information is also available on our website. And we will continue to write for the Eureka Report, Morningstar, and Morningstar publications. And in particular, we have another article coming out in the Morningstar shortly. And as always, I'm encouraging all of our shareholders to join our newsletter distribution list, and potential shareholders to join our newsletter distribution list. And increasingly, we're providing more and more information to our shareholders in the form of articles, newsletters, webcasts, and a lot of information to make the investment process and the stocks within our portfolio as transparent as possible. Thank you for your time listening to this webcast, and if you'd like to know any more information, please visit our website at cadencecapital.com.au or join the newsletter distribution list. Thank you.